everyone, welcome to my channel where I give bookkeeping and tax tips to entrepreneurs and small business owners. In this video, I am going to tell you how to file taxes as an independent contractor or someone who earns 1099 income. Also, make sure that you stay to the end because I'll give 5 tax deductions that are helpful for independent contractors. If you're interested, go ahead and hit that like button. If you want to see more videos like this, hit that subscribe button, hit that notification bell. Let's get into the video. Okay, so as someone who is a independent contractor or someone who has 1099 income, and this is income from a 1099 NEC or a 1099 MIS, you will file your taxes on a Schedule C. So you are going to file your taxes the same way that a sole proprietor will file their taxes, regardless of if you have a separate entity set up or not. And this is going to be in your benefit because when you file your taxes on a Schedule C, then you have access to business write-offs. So you can write off things like your home office, any supplies that you needed to buy in order to do the job, if you needed to do any traveling for the job, any equipment, whatever have you. You can write off those things off on your Schedule C. A common mistake that I see people making when they have 1099 income, especially people who have W-2 jobs and 1099 income, they'll put the income that they had as other earned income rather than putting that income on a Schedule C. Do not do that. You want to always put your 1099 income on a Schedule C, your independent contractor income or 1099 NEC, 1099 MIS on a Schedule C because that gives you access to different business deductions. If you are putting that income only on the other earned income line, then you are missing out on a lot of tax deductions that could lower your taxable income and in turn lower your tax liability. So if you are someone who has 1099 income, regardless of if you have a W-2 job or if 1099 income consists of 100% of your income, make sure you are filing a Schedule C. And you do not need to have a separate business entity set up in order to do that. You will just file your taxes as a sole proprietor. Okay, so another mistake that I see people making is that they are not reporting their 1099 income. So I hear folks say a lot that if you have 1099 income that was less than $600, then you don't have to report it. Well, that's not true. So if you have 1099 income from a particular organization that was less than $600, the organization does not have to issue a 1099. However, individual taxpayers who have self-employment income of more than $400 have to report that self-employment income. And keep in mind, this is a combined income. So let's say you have company A and they pay you $350 to do a job. Then you have company B. Company B pays you $350 to do a job. This is less than a $600 reporting requirement for companies, so neither of these companies is going to issue you a 1099. Well, they don't have to issue you a 1099. However, the combined income that you made from both of these companies is $700. Because the $700 is above the $400 reporting threshold, you do have to report that on your taxes. Now, I know some of y'all are still not going to report it, and that's all on you. I just wanted to clarify. The good thing is that you report it on a Schedule C, so you qualify for business deductions. As I mentioned before, any vehicle expenses, any if you needed to buy a computer for some reason in order to do the job, whatever have you, you can now write that off on your tax return. You might end up with a loss, which is better for you in terms of lowering your tax liability. So keep that in mind when you are filing your taxes. Also, when you are an independent contractor or you have 1099 income, please be aware of taxes. I talk about taxes a lot, obviously, but this is something that is extremely important and not a lot of people prepare for it. When you have 1099 income, you are just getting a check, right? The company that is paying you or the organization that is paying you, they are not taking any type of taxes out of that check. State taxes, employment taxes, federal taxes, local taxes, none of that is coming out. You are just getting all the money and it's on you to take out whatever money that you need to pay those taxes. So make sure that you are setting aside money for your taxes. And keep in mind that your taxes, they consist of federal taxes, Employment taxes. So your self-employment taxes are going to be 15.3%. That is the Social Security tax and the Medicare tax. But then also, if you live in a state that has state taxes, you have to pay state taxes. If you live in a city where you have to pay local taxes, then local taxes. So you could very well be paying close to 35% or more of your money in taxes. So when you are getting your checks, you want to make sure that you are setting aside the appropriate amount of money so that you can pay your taxes at the beginning of the tax year, or you're going to be getting a surprise. I highly recommend that if you are an independent contractor or you have 1099 income, that you sit down with a tax professional to talk about the implications that this income will have on your taxes, but also to talk about some write-offs that you could potentially qualify for, or some tax credits that you could potentially qualify for with this new status that you have. And just make sure that you are building a relationship with a tax professional in general. You want to make sure that you always have a good tax accountant in your back pocket for times when things like this arise, or you might have other issues. Maybe you want to buy a rental property, maybe you want to sell your house, whatever have you. Many major life events are going to be taxable. So you want to make sure that you are building a relationship with some tax professional so that you can talk these things through with them so that you're making the best financial decisions for yourself. Also, a good rule of thumb when you have 1099 income is to set aside 20 to 30% of your money for taxes. So set up a different bank account that is specifically for taxes, and whenever you get your check, put aside 20 to 30% of that money so that when tax season comes and you file your taxes, if you have a tax bill, you are not surprised and you're not scrambling to figure out where you're going to get that money from. So make sure after you finish watching this video, call your bank, go to the bank, go on the website, whatever have you, set up an account designated specifically for taxes. Start putting money into your tax account so that you are prepared. Okay, let's get into these tax deductions. So the first tax deduction that we will talk about is the health insurance premiums tax deduction. Now, this is a really helpful tax deduction for people who are independent contractors and have 1099 income, because most of the time you have to find your own health insurance. You don't have employer-backed health insurance. Well, you can write those health insurance premiums off on your taxes. Now, the good thing about this write-off is that you don't have to itemize your deductions in order to take this deduction. Now, the next deduction that we're going to talk about is the business use of home deduction. Now, if you have a home office, then you can write off some of your home expenses on your taxes. Now, keep in mind that this home office does have to be in a separate space that is specifically dedicated to your job. It cannot be a combined living space. So if you have a dining room that connects with your living room, but you're using your dining space as an office, that is not going to qualify. It has to be in a separate room, and that room has to be specifically used for business. Now, the next is the business use of vehicle. So many people are using their vehicles in order to do their independent contractor work. If you are doing DoorDash, if you're doing Uber, you can write off your vehicle expenses. You can write off things like gas. You can write off things like repairs and maintenance that you have to do to your car, or you could just write off the mileage. You need to talk to your tax professional on which one will be more beneficial to you, but this is a deduction that is going to be really helpful for you. So next is the self-employment tax deduction. So as I mentioned, you do have to pay 15.3% in self-employment taxes when you have 1099 income. However, you can write off half of that on your taxes. Now, the last deduction that we'll talk about is the qualified business income deduction. With the qualified business income deduction, you get to deduct up to 20% of your business income from your tax return. And as someone who is an independent contractor, since you fill out a Schedule C, that does make you eligible for the qualified business income deduction. Thank you for tuning into my video. I hope you found this video helpful. If you need help with tax planning or tax preparation, feel free to contact me. My information is in the description box below. Don't forget to like, comment, subscribe, and share this video with someone. Okay, see you next time.